Today, we're digging into NVIDIA Corporation's latest Form 10Q. This one's for the quarter ended July 27, 2025.
Right. And this isn't just any filing, it's like their quarterly health check. Gives us a real look inside, the financials, the strategy.
Exactly, a tech giant under the microscope.
And our goal today really is to give you the shortcut. We'll pull out the key results, the risks they're flagging, and what the outlook seems to be, all straight from the source, just the crucial bits for you.
Perfect. So let's jump right in. The Q2 results for their fiscal year 2026. They're pretty striking. Revenue hit $46.7 billion. That's a huge 56% increase from the same time last year.
Yeah, 56%. And what's really driving that overwhelmingly is the data center segment. That hit $41.1 billion, also up 56% year over year.
So it's the engine.
Absolutely. It's all about accelerated computing, their AI solutions, and especially, the ramp up of their Blackwell architecture.
Yeah.
That saw a 17% sequential jump. We're talking Blackwell Ultra platforms, too. These are their next-gen AI powerhouses.
The new stuff everyone wants for AI training.
Precisely. And it's worth noting the big cloud service providers, they account for roughly half of that data center revenue.
Okay, so the AI gold rush continues, and NVIDIA is selling the essential gear.
But digging a bit deeper, there are nuances, right? Like in the data center compute revenue.
Exactly. So compute revenue was $33.8 billion, still up 50% year over year, which is massive, but it actually dipped sequentially. And that was driven by a $4.0 billion drop in H20 sales.
The H20 chip. That's the one designed for China, hit by export controls. A clear impact right there.
A very clear impact. But contrast that with networking revenue. That just soared. $7.3 billion, up 98% year over year.
98%. What's behind that?
That's propelled by things like NVLink for connecting the Blackwell systems together at high speed, and also their XDR InfiniBand products, crucial interconnects.
Okay, so strength shifting within the segment. What about the bottom line profitability? Looking really strong there, too. Net income reached $26.4 billion. That's up 59% year over year. And diluted EPS, earnings per share, hit $1.08. Up 61%.
Wow. And gross margin?
The gross margin for Q2 was 72.4%. Now, that's actually down a bit from 75.1% last year, mostly because the Blackwell revenue involves these big, full data center systems. But importantly, it's way up sequentially from 60.5% in Q1.
Okay, why the big jump from Q1?
Well, two main things. Remember that big $4.5 billion charge they took in Q1? That was for excess H20 inventory because of the export rules.
Right.
Then, in Q2, they actually released $180 million of those H20 reserves because they managed to sell some of that inventory to customers outside China.
Interesting. So managing inventory around the rules.
Exactly. And speaking of dependencies, they also flagged customer concentration. Two direct customers in compute and networking made up 23% and 16% of total revenue.
That definitely adds a layer of risk, especially with everything going on. Which brings us to those export controls. Let's unpack that a bit more.
Yeah, it's complex. So April 2025, the U.S. government required licenses to export H20 products to China. That directly led to that Q1 inventory charge.
Okay.
Now, in August 2025, they mentioned licenses were granted for certain H20 products to specific customers in China. But, and this is key, they state, no revenue's been generated, yes, no shipments made under those licenses.
Huh? So licenses exist, but nothing's moving yet.
Right. And the U.S. government apparently expressed an expectation that maybe 15% of revenue could come from these licensed sales, but NVIDIA notes that's not actually codified. It's uncertain.
A big question mark. Okay, but here's where it gets really interesting for me. What about the wider picture, beyond just the H20?
That's a critical point. Back in January 2025, the U.S. government actually pulled back an AI diffusion interim rule, an IFR. That rule would have slapped worldwide licensing requirements on their most advanced stuff, H200, GB200, GB300.
Wow. Okay, so that rule is gone, but what replaces it?
Exactly. The uncertainty around a replacement rule creates risks. Competitive disadvantage, potential supply chain chaos, maybe even new mandates like chip tracking or performance throttling.
And China's reaction.
Well, the filing notes the Chinese government has publicly questioned potential vulnerabilities in the H20 products. So pressure from multiple angles.
And beyond geopolitics, there's the tech itself. What about open source AI?
Yeah, that's another risk they highlight, the rise of really good open source foundation models. If those models get widely adopted and run well on competitor hardware, that could seriously weaken NVIDIA's whole platform advantage, the ecosystem they've built. It could hit demand.
Makes sense. Okay, but on the stability front, how are they doing for cash? liquidity?
Very solid. They had $56.8 billion in cash, cash equivalents, and marketable securities at the end of July.
That's a hefty cushion.
Definitely. And they've been returning a lot of capital to shareholders, $24.2 billion in share buybacks just in the first half of this fiscal year. Plus, they just authorized another $60 billion for future repurchases in August.
Okay, so financially strong, navigating some serious headwinds.
Yeah.
What is the big takeaway here for you, for our listeners?
I think it shows NVIDIA is still this absolute powerhouse driving the AI revolution, no doubt. Their tech is leading the charge. But they're also operating in this incredibly complex, volatile world. They're having to meticulously navigate geopolitical tensions, export rules, and, frankly, intensifying competition. Their success depends just as much on managing these external forces as it does on pure innovation now.
Right. So here's something to think about. Considering this constant push and pull between tech innovation, national security concerns, and global competition, how might these rapidly changing export controls end up reshaping not just NVIDIA, but really the entire global tech industry landscape down the road?